First off, I would warn your viewers that anything I say on Tesla is likely wrong.
Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So in this video, doing something a little bit different today. We're going to look at two clips from recent Tesla coverage in the media. The first, a little bit of brutal honesty, but also some great insight around Tesla investors, how people are assessing the stock, etc. And the second is Jefferies discussing their recent Tesla stock price upgrade to $2,500. Yes, a $2,500 Tesla stock price target. So let's see what they had to say. But first, hey guys, if you're in the US and you'd like up to 2 free stocks, check out the link in the description to WeBull. If you open a new account and fund it with $100, you get 2 free stocks, one of them valued up to $1,400. And if you're in Australia, the UK or New Zealand, you can get a free stock with stake using the link in the description. Let's get back to it.
Specifically Tesla, you've been outspoken about the company before. Nicholas Collis of DataTrack was out with an analysis yesterday saying they might not join the S&P 500. It's not fait accompli because their profits came from regulatory credits. I'm just wondering what your thoughts are on this matter.
Just wanted to chime in here and point out that this is the type of FUD, fear, uncertainty and doubt, the misinformation that will continue to be spread about Tesla ad infinitum, whether it's short sellers, big oil, shills, people with inferiority complexes, etc. No matter what it is, no matter how successful Tesla is going to be, there's always going to be negative media and press coming out because somebody has a vested interest in scaring, spreading uncertainty, worrying people, getting people to sell the stock, bring the stock price down, etc. It's never going to end, so just keep that in mind.
So Jared, first off, I would warn your viewers that anything I say on Tesla is likely wrong. I have gotten Tesla wrong. You're talking to someone who 14 months ago at South by Southwest said in front of 3,000 people that the stock would crash below $100. And I think it sits at 2,000.
I really appreciate this brutal honesty. Now, guys, I'm going to give you a little bit of a secret about this YouTube channel and how I approach life and what I think in general about people sharing their opinions. If you have no idea what the fuck you're talking about, okay, that's great. You're still allowed to talk, but it's always best to preface by saying, hey guys, like I literally don't know what the fuck I'm talking about, or better not to talk at all. Have you guys noticed that I don't cover 659,000 stocks like most other investment related channels on YouTube? There's a reason, because I don't know what the fuck I'm talking about on 99.9% of things. I talk a lot about Tesla though. Get it? So full credit where it's due. This is the right approach. I have no idea what I'm talking about, but
I mean, Tesla, to a certain extent, is this perfect example of how COVID-19 is an accelerant, bringing the future forward 10 years. At the outset of the pandemic, Tesla was the 4th most valuable automobile company in the world. You had Toyota, you had Volkswagen, and then Daimler, and then Tesla. Fast forward 5 months later, Tesla is number 1 and worth more than the other 3 combined. If Tesla sells every car in the world for the next 10 years, it would be hard to justify its valuation based on traditional automotive metrics. It feels as if we're in this era where the narrative has become more important than the numbers, and everyone has accelerated their vision of a company and its narrative out 10 years.
Absolutely nailed it. I agree completely, 100%. Obviously, today, if you're looking at Tesla's stock price and you're comparing it to an automotive manufacturer, makes no sense. But the thing that's happening now with Tesla's stock price, I've said this many times in my Patreon Q&As when people ask, what's my Tesla stock price target, blah, 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 blah. I don't have one. I literally don't care what the stock price is today or the market cap. All I care about is how far into the future can I see and what does it look like in terms of Tesla's future, their ability to dominate multiple markets, etc. More importantly, I believe that the thing that's dictating Tesla's stock price in the wider market, if you take the average consensus, the average of how far out into the future people can see and what they're seeing relating to Tesla, that is what is driving Tesla's stock price. And the thing about Tesla now is Tesla has such a clear run for so long into the future, electric vehicles, autonomy, energy, etc., that people are valuing the company differently to a lot of other stocks because they can see further. I'm sure there's a few stock nerds who are super triggered now in the comments. Oh my god, I thought you knew stuff about stocks! Said before, I'll say it again. I don't think like a traditional stock investor because I'm not. I'm not a stock investor. I'm some random dude who a few years ago noticed an opportunity and realized I'm not dumb enough to miss this, bought some Tesla stock. Did the same thing with Amazon and Google, not because I was looking for something to invest in, but because I saw what they were doing. I looked into the future. I did some inference, I thought, well, hang on a minute, they've got this data lead, I see them in a dominant position in this market or with that market. Well, I think I'm going to invest in this company. So, just for the record, this is what's happening with Tesla, in my opinion. People are looking at the stock and realizing what the future looks like. And in the case of Tesla, many people who sit down, think a little bit, can actually see that the future for Tesla out very far looks very bright. They have a very clear run and absolutely dominating multiple industries. This is what's driving the market cap and the stock price of Tesla, in my opinion. Forget all the traditional stuff, forget value investing, forget all that horse shit. It literally doesn't matter. What matters is how far out into the future can people see, what does it look like, and what they're seeing looks very good.
And people look at Tesla in 10 years and think they could be in space, they could be the largest power company in the world. This company continues to innovate, continues to perform. But the valuation here is just extraordinary. And I know this goes to our next segment. I would argue that Tesla and some of these other names, including Apple, are being bid up by mostly young men, mostly spending their stimulus checks, mostly levering up these purchases and juicing these stocks. So I think there's some very unhealthy underlying dynamics. But again, reading the fine print here, I get Tesla wrong every time I talk about it.
Once again, I applaud the honesty, and once again, I reiterate, I really believe that what's driving Tesla's valuation at this point in time is the fact that people who are sitting down, thinking, looking at it in the future are realizing that Tesla has a really clear run at absolutely dominating trillions of dollars of industry. This matters. And speaking of the future, now let's move on to Jefferies, who've recently upgraded their Tesla stock price target to $2,500.
Jefferies boosting its price target on Tesla a short time ago to a street high of $2,500 a share, $500 post-stock split. Joining us on the Squawk Newsline is the analyst making that call, Philippe Bourgeois of Jefferies. Philippe, great to have you with us. The stock has had an incredible run, up about 25% since it reported earnings just about a month ago. How much of this adjustment to the price target is mechanical, in that your price target prior to this adjustment was $1,200 and you're at a buy rating? And how much of this is an actual fundamental change in the story since earnings?
Well, good morning. It's fair to say that it's been difficult to keep up with the magnitude and the speed of the move in the share price. I think what's interesting to keep in mind, though, is if you look at the past 12 months, we've had a pretty consistent set of upgrades. The growth expectation has doubled in the past 12 months. The revenue the profit and cash flow expectation up 50%. And then, of course, there's probably a general reduction in the cost of risk around Tesla, which isn't just to the market, but also the fact that Tesla has executed much better than anybody expected through the course of 2019, but also through the pandemic.
So the reasoning around the upgrade there, Tesla's more profitable than expected, they're executing better than expected, they navigated a global pandemic better than expected, all valid points. But I do want to nitpick just a little bit because, hey, if I keep making predictions in the past that go against the consensus and I'm right, I've got to remind you guys sometimes, right? Months ago, in the midst of the pandemic, while people were crapping their pants thinking Tesla would struggle to sell 100, 200,000 vehicles this year, this guy, hey guys, they're not going to even change their guidance. They'll still be aiming for over 500,000 vehicles this year, and they will either reiterate or leave guidance unchanged in Q2. And what happened? Exactly that. But wait, there's more. Ahead of Q2, before the shorts even hit, again, I said, hey guys, Tesla's going to post a Q2 profit. Watch. Again, they did. Now, how did I know this? I'm not a genius. The reason that I knew was quite simple. I've been intimately following the company for so long now. I understand how well they're executing, how agile they are, how well they're being led, how efficiently they're managing their capital, how lean they are as an operation. It was not surprising. The point I'm trying to make here is not to be, oh, look how good I am. Yeah, my head's big enough as it is already. The point I'm trying to make is this. Wall Street still is missing this trick. Most of Wall Street is sitting scratching their heads going, how the f***, what's going on? I don't understand. Meanwhile, a few smart analysts are looking closer and realizing Tesla's lead is unassailable. It's accelerating, okay? You do not catch up to somebody that's already got a head start and is moving faster than you are. This is what's happening. This will not be the last upgrade on Wall Street, I guarantee you. So just to wrap that point up, yes, Tesla has executed better than most, but not everyone, expected so far in 2020.
And I think that all those things together they'll continue to support the valuation. Of course, we'll have to see what the company says on the 22nd of September with more details on the business model and the battery performance. But I think there's a continuum of improvement in terms of the outlook for growth and profitability at Tesla against the background of lower cost of capital.
Musk has already tweeted about battery expectations, that he expects 50% more energy density in the next 3 to 4 years. Is this a precursor, just a sort of a hint of what's to come from Battery Day? Is this what you're expecting?
Well, I think we'll get some new benchmarks for density, for cost, and for capacity, which are all very, very critical. I think what we're looking for as well is more pointers on what could happen in terms of non-automotive markets like stationary storage, but also what it could mean for the global auto industry if battery longevity increases and we get to a point where batteries can last 1 million miles. And I think that, it'll be, I don't expect Elon Musk will frame that clearly, but I think the industry should think about what the impact could be of that battery longevity on the business model of the industry and
right.
on the residual value of vehicles, electric vehicles.
Hugely important point there to wrap things up. Whether or not Elon Musk talks specifically about the implications to the broader automotive industry of revealing a million-mile battery, who knows? But here's the thing. How on earth will traditional automakers who are making internal combustion engine vehicles even hope to compete with a product that will last longer than the customer's lifetime unless used in an autonomous robotaxi which will make them money while they sleep? The traditional automotive model is dead. Most of their profits are made not on the sale of the vehicle but on service and parts after all the shit inside breaks. If your stuff's not breaking because there's so few moving parts and your core technology lasts a million miles, it is game over. The value proposition is just too good to ignore. And just to give you guys some context for how much weight these Analyst upgrades can have on a single stock, let's bring up the WeBull app now and look at how Tesla stock is trading after the Jefferies price upgrade to $2,500 per share for Tesla stock, or $500 per share after the split. So far during trading today, we're up 4.17%, over $80. Probably as a direct result of this Jefferies upgrade. Sure, maybe something else is influencing the stock, but most likely this is simply a result of Jefferies coming out and saying, hey guys, Tesla is executing way better than we thought. They're way more profitable than we thought. The future looks way brighter than we thought. Let's upgrade this stock. So I hope you guys have found this video insightful. I thought I'd bring you these two perspectives just to show you the two camps on Wall Street. One group over here is like literally no idea what the fuck's going on. Some of them admit it, some of them don't. I always recommend admitting if you don't know what the fuck you're talking about. Let everyone know first, otherwise you're more likely to get wrecked on YouTube by somebody like me. And the second camp have actually dug a little bit deeper and are starting to see some of the things that have been obvious to you and I for much longer. Tesla has a clear run at absolutely dominating multiple industries this decade. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. And of course, don't forget your free stocks with WeBull. If you're in the US, you can start a new account with WeBull using my link below. Deposit $100, you'll get 2 free stocks, one of them valued up to $1,400. And if you're in Australia, New Zealand, or the UK, you can get a free stock using the link in the description to stake. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.